Welcome, everyone, to another episode of the HR and Payroll 2.0 podcast. I'm Pete Tiliakis, and as always, I'm joined by the legendary Julie Fernandez. Welcome, Julie.
Thanks so much, Pete. I'm excited because we're going to do some learning today in the fintech space, right?
Yeah, there's been some more controversy. The CFPB is added again. If I say this right, the Consumer Financial Protection Board, right? And I'm really excited. Today, we've got Ian P. Moloney. He is the Senior Vice President and Head of Policy and Regulatory Affairs at the American Fintech Council. We're going to be talking open banking today and all the chaos that's going on around that. Welcome to the show, Ian. I'm really excited to have you, man.
Awesome. Thanks, Pete. Thanks, Julie. Happy to be here and chat about all things CFPB. It's bureau, not board, which is actually a separate conversation because there is some conversation around should it be a board or should it be a director? But that's probably beyond the scope of this conversation. However, it certainly plays into the politicized nature overall.
Yeah. There's a lot to unpack here.
I have a feeling we're going to be talking about a lot of acronyms that we don't usually talk about on this podcast. And so, Ian, I thought I would queue up today just asking you about the American Fintech Council. So AFC, our folks will hear that. What is it and what is your role with the AFC?
Yeah, so AFC or the American Fintech Council, to make sure that we're spelling it out long form and not using too many acronyms, is a standards-based trade association. We represent, as the name would suggest, a number of fintech companies. We have about 150 in our membership overall right now, but uniquely within the space, we also represent a number of innovative banks. And so having that bank and fintech focus really gives us a broader perspective on things like open banking, which we'll discuss later, but also, a number of issues. We represent earned wage access, buy now, pay later, a lot of lenders that were, originally in the space going back to the early or mid 2000s. And also, reg tech companies that are engaging, making sure that, enterprise use cases or consumer facing use cases can run more effectively and efficiently. And so, broadly put, we really do try to build an ecosystem for the bank fintech partnerships, for fintech writ large. And I mentioned that we're a standards-based association. And so we do have specific standards related to certain financial services and products, such as lending. We advocate for 36% interest rate and below. For our members, and our members really stick to that in their lending practices. And then earned wage access, we have a number of different standards associated with how that product should be developed, because ultimately what we're trying to do is ensure that it's responsible innovation, not just innovation taking some of the ills of the analog world and putting them into a digital space, but really trying to improve financial services, especially for those that have been historically underserved.
I was just going to say in your role, but if you want to go with the second first, Pete.
Yeah.
No worries. I'm happy to chat about my role. So I am the Senior Vice President, Head of Policy and Regulatory Affairs. As the name would suggest, everything that engages or comes in the door from a policy perspective, of which there's a lot, no shortage of topics ranging from, more of your vanilla bank issues that definitely impact our innovative banks, as well as the myriad of fintech issues that we've seen come across particularly over the last few years. I think there's been an increase, a real uptick in regulatory scrutiny and engagement. So, it's good that I have a pretty robust background in financial services and particularly around financial regulation. So I spent 6 years at the U.S. Government Accountability Office, a legislative branch agency focused on financial services, particularly on fintech. Also did a brief stint with the University of Cambridge, their Center for Alternative Finance, focused on global fintech regulation. So it's always good to keep that in mind when kind of juxtaposing the two different or multitude of different regulatory frameworks that we see as it relates to fintech. Then I jumped over, joined a bank because I felt a need for more implementation in my life as opposed to research. Still love research, but really wanted to get in on the advocacy side, and then joined American Fintech Council about a couple of years ago, and it's been off to the races ever since. Been very, very involved across the industries. So So yeah, very happy about that.
Yeah, one of the things I've come to learn, I've interviewed your founder a couple of times at Money 2020, Phil Goldfeder, on the source over by DailyPay. And one of the things that I always thought was interesting about the firms that are the cohort of your members, they're not just innovators, they're very disruptive. And I think that's part of the story here, as we're going to find out with this CFPB ruling. So,
come on, are you guys going to shout out a few of the disruptors? It sounds like these are the
yeah. Can you say who some of the cohort is?
Yeah, absolutely. So within our
I know
membership,
some of them.
yeah, absolutely. We have a number of different folks that have really kind of pioneered that innovative space. So thinking of like SoFi and Lending Club, that were early adopters of financial technology and really moving in that space. Eventually, they both became banks. But then on the bank side, we also have like Cross River Bank and customers. Buy now, pay later. We represent Affirm. So some really big names. And then I would be remiss if I didn't mention some of our earned wage access folks that range from DailyPay and Earnin, PayActive, Bridget. So we really have the balance of that market, and then there's also a number of different RegTech folks like Afterman and Unit, and really a whole myriad of different really disruptive but very very interesting and innovative folks. And I think it's disruptive not in the pejorative sense. It's disruptive in really the positive sense, going back and thinking about how we've seen disruption throughout the financial services industry. This is really, the group that's pushing the 21st century of banking.
Yeah, I would agree. I'm a huge fan of fintech. I think it's really leveling the playing field when it comes to the access of money for people. We're not all born in the same opportunity space, maybe not even the same education. And I think fintech is just a tremendous helper there of making inclusivity with money. So I love it. So I want to talk about, I've met some of your clients. That's why I said they're all very disruptive. I've had some on the source, and I've met a few at Money 2020. But I love it, right? Because I feel like, look, if we've all banked as the traditional banker, that's how I came up. Using you went to the bank, you put your paycheck in, that's what you did. You got all your products there. There hasn't been a whole lot of innovation, though, that has come out of those stodgy old banks. And I think that's part of the beauty of what these disruptors are doing, because they are moving very fast, creating very cool solutions and solving real problems for people, which I personally love. But I want to talk about this latest angst with the CFPB. We've featured some conversations here on earned wage access and some of that conundrum that was happening last year. But talk about what's going on with open banking. And maybe first explain what open banking is. I know my definition, but it'd probably be best to hear it from an expert like you. I'm a huge fan of it. I think it just seems like the future, this democratized approach to our data. And it's foundational to my payroll everywhere concept, which we'll save for another episode. But yeah, if you could explain what's going on, man.
Yeah, absolutely. So obviously there's no one definition of open banking, but generally, I mean, in simplest terms, it's the ability to move data safely and securely, consumer data, that has been permissioned by the consumer to help them access new and innovative financial services and products. Now, that is often done through data aggregation services that they've kind of built the pipes that allow for the connectivity between fintech companies and also their partner banks who might not have access to the data, and some of the largest financial institutions that, generally speaking, have a number of depositors and have kind of set up walled gardens, so to speak, around the data. And I'm sure we'll get into that, that issue a little bit later. But ultimately, it's about the movement of data overall throughout the financial services ecosystem. And to your point, Pete, I mean, this is very much so a consumer demand. And thinking back to the actual text of Section Dodd-Frank 1033, and I'm sorry for getting a little wonky, but it is really focused on the consumer having the rights to their data and having that data be provided to them, essentially full stop. On that's what they're going to have access to, and covered entities being financial institutions needing to provide that data. And so ultimately that's what makes the ecosystem go around, and especially in this 21st century banking system, that is the lifeblood of these innovative financial products and services.
Yeah. And you can see how the banks obviously want to protect that. I mean, certainly, I'm sure they think it's their data. And it's kind of like social media, Julie. It's like, whose data is it? Is
Yeah,
it
yeah.
Facebook's or is it mine? Same thing with when you go to an HCM platform, I feel like, is in some ways. But so, Ian, so I understand that the CFPB put out a ruling over the summer. It got a little angsty. But then they turned around and kind of reversed themselves. So what was the controversial sort of line in the sand that they drew? And then I want to get into some of the reactions because I've seen what JP Morgan is now doing. I don't know if that has anything to do with the law or if it's more just protecting their business. But let's start there with like what happened this summer with the CFPB and the Dodd-Frank.
Yeah, sure. And if you don't mind, I'll go back even further a little bit
Yeah, please.
just to paint the picture. So essentially the open banking rule or Dodd-Frank 1033 rule, or I think it's actually known as the personal financial data rights rule. All of those different terms that have been used for a decade or more, because this goes back to the passage of Dodd-Frank 1033, and then really like 8 years from the time of that passage to, or well, really even more to the actual finalization of the rule in October of 2024. There were tons of conversations about what the Bureau was going to do as far as was it going to prohibit fees for financial institutions to who hold the data, from prohibiting the fees to access the data for financial technology companies, for consumers, how that was going to operate, what the definition of consumer is, and how what the authorized third party, who they are, even things as far as the scope of what data would be subjected to the rulemaking. Now, under the final rule, and I think generally speaking, as it's carried forward, even in its likely modified form coming later this year, it's about Reg E and Reg Z accounts. And
Yeah.
so though that's the data, although it fits as sort of a microcosm within the broader financial data ecosystem and the broader open banking discussion or open finance discussion. And so ultimately that final rule, like I mentioned, was finalized in October of 2024. And pretty quickly, I think it was the day that it was announced, Director Rohit Chopra, then director of the CFPB, was up at the Philadelphia Federal Reserve's Fintech Conference, which I was there too. Luckily enough, we were hanging out in the same room, and that's where he made the announcement for the finalization. By the time that we all sat down to dinner, there was a lawsuit
Oh, wow.
filed by the Bank Policy Institute, a bank that was part of the Kentucky Bankers Association, and the Kentucky Bankers Association itself filed in the district court, the Eastern District of Kentucky, arguing that the CFPB essentially overstepped its authority and that this rule was unlawful. And so that's how things stood as it related to that final rule. It was kicked into court. But the final rule took effect in January of 2025. Now, also in January of 2025, we had a new administration come in. And
Ah,
the new administration did not see it as beneficial, or they saw it as not necessary to be defending that rulemaking that came out, and they essentially kind of pulled back their defense of the rulemaking. Up until then, the Bureau had been, it was the Bureau essentially against BPI. Now, in that fray, one of our fellow trade associations, the Financial Technology Association, jumped in to be. They filed a motion to intervene to essentially become the defendant of the rule, and so that was eventually granted. And then the Bureau in the spring actually filed a motion for summary judgment, and that was saying that they saw it as the court needed to make a decision or determination, saying that essentially the Bureau acted unlawfully. Now, there was a lot of concern as that related to the broader ability for the Bureau to actually engage in further rulemaking around Dodd-Frank 1033. And so, the FTA as well as AFC and a number of other trade associations and our members really started to advocate that the Bureau needed to re-engage with the rulemaking, and if they're going to pursue something, they need to, just modify the existing rulemaking. And so eventually, over the summer, the Bureau requested a stay in the litigation to initiate a new rulemaking process. And so that has led us essentially to where we are now, which is that just a little bit ago, a few weeks ago, the Bureau actually issued its advance notice of proposed rulemaking to start that process, and it's on a pretty significant pace because of the fact that the court granted the stay, but also has, I think it's 30-day progress reports that the Bureau has to provide to the court in order to make sure that they are acting in good faith and actually, pushing the rulemaking. And so it's moving at quite a good clip. We're seeing the ANPR right now. We'll likely see a proposed rulemaking pretty, soon after the ANPR dust settles, and then we'll move from there.
Hey, so I have a confession in all of this. I've heard a lot of who owns, right? Like who's the king of the castle? Who can make the laws? So much so that I think I've lost track of what was the rule that was made that kind of got the whole thing rolling. Or maybe it doesn't even matter anymore because it all just spiraled into, I can make the rule. No, you can't. I make the rule. Maybe it doesn't, is it like irrelevant? Or I'm thinking, I don't know what Reg E is and what Reg Z is. And like, is it a payroll rule? What the hell kind of a rule is this?
Yeah.
It's the complexity is definitely not lost on anyone that's even remotely close to this issue because of the fact that really, generally speaking, we don't see an agency kind of move its position between two very, very different viewpoints. Like, generally speaking, it defends a rule and continues on. So it's an interesting place that we find ourselves of kind of that movement back and forth by the Bureau. But it shows that ultimately this conversation around whose data it is, and also, more of the mechanics of essentially what opportunities or what abilities do the financial institutions have to ensure that the data remains protected, and then also the fintechs, what duties they have to do the same thing, and who is going to make money off of this, who is going to actually be able to build their business, and ultimately at the end of the day, there's a lot of that the conversation has centered on, and so I think it's an important piece, but it's equally, if not more important, to recognize that at the end of the day, the consumers own their data, and so anything that limits their access should be seen as sort of against the framework that was established in Dodd-Frank Section 1033. But ultimately, Julie, to get to your question a little bit more succinctly, if I can, even though a long-winded affair in the interim, it really is still the Bureau's authority to promulgate the rulemaking, and so that's what they've done previously with the final rule, and that's what they will continue to do with any modifications. It's within their remit to do so.
Yeah. So, I mean, as it stands right now, it sounds like that was a win for the open banking team, temporarily at least. Do you think we'll get clarity this year, or is it going to be more next year that we'll get some better clarity?
So I see it as a really long tail.
Yeah.
I think there will be some additional clarity on what the Bureau is prioritizing, how they're engaging with the rulemaking, what they're thinking of modifying. We've already seen that in the advance notice of proposed rulemaking. We'll most certainly see that once the actual proposed rule comes out. But there's still a significant litigation risk that exists because essentially the existing
by the big banks, you're saying,
by both parties,
okay,
because of the fact that you have in the final rule a prohibition on fees, and I'm not necessarily being reductive to just move it to this part of the conversation, within the lawsuit. But essentially, that is a significant part of the argument from the banks that the Bureau was not able to prohibit their fees from being charged for access to the data. And so ultimately, that has been a consideration moving into the advanced notice of proposed rulemaking. There's questions associated with fees and the ability to promulgate a rulemaking that prohibits fees. But ultimately, should the Bureau not prohibit the fees, then there's a potential that the financial technology companies could actually pursue a new suit. And so, and if they do prohibit the fees, the banks could re-engage with their original suit. And so I think we're kind of in a really interesting position where the US open banking system has been largely market driven for for really the entirety of its existence. Now this operates fairly differently from like the UK system, which they had a regulator come through very early and specify to the banks, like this is the data that you will provide and this is required. And so that market development, I think, is still being seen now in lieu of sort of a reaffirmation as it relates to the principles of the final rule from the current Bureau. And so we've seen, JP Morgan Chase offer, saying that they're going to charge fees. We saw an agreement that was between Plaid and JP Morgan Chase. And that really focused on, I think, providing continuity to their customers. But also there's still the sort of legal permissibility question about, is JP Morgan even allowed to provide or to assess those fees? Because and this, if you'll give me 2 seconds to get super in the weeds, I think this gets to the point of the effective date. Now, the effective date of the rulemaking is different than the compliance date of the rulemaking. Your listeners might be thinking, well, why does that matter? And I really, this seems like kind of legal minutia or policy wonky minutia, but in the sense that the effective date, which is when the rule actually takes effect, it is, then law and it's binding, versus when companies are expected to comply with the rule, which is a good faith movement to compliance, is that window. Now, the assessment of fees by JP Morgan Chase and by some other larger banks that we think are likely based on the reporting that we've seen on the issue, it does not seem as though it's in good faith with the actual requirements of the final rule, which are still in place. And so there's sort of a legal permissibility issue that I think is present. And ultimately, the market movements at this point are to sort of avoid any legal skirmishes, any additional legal skirmishes while the rule is being considered again or reconsidered by the Bureau. And, it's to ensure that their consumers still have access to the data and to the products and services that they need.
Yeah. Can you just elaborate? I read this story about the JP Morgan thing, and I don't know that that's entirely just about this law. I think that this is them doing this in general, and they would have done it anyway to protect their business. But could you explain what JP Morgan is basically doing? My understanding is they're charging the aggregators like the Plaids for the access of the data and the integration and security of that data. But ultimately, isn't the customer just going to end up paying that bill? Or is it the other way around?
Yeah, there's definitely a concern as it relates to the consumer. I think, the discussion around fees and what's being assessed is, it's a tough one to actually hammer down what is being charged for. Is it the access to the data?
And who's going to end up with the money?
And who's going to end up paying for it? And also, like, is it even allowable? And I think that it goes back for us to the discussion of, does this inhibit the ability for the consumer and more specifically in this case, the fintech who's acting on behalf of the consumer? It doesn't limit their access to the data. They were the ones that developed the rails essentially, or the ability, the pipes to move this data. This data was always available, but no one could use it, right? And so that's where I think there's kind of, from the financial institution, there's an end run around the the strategic misstep, if I may say,
Yeah.
of not developing the right infrastructure to ensure that their customers get the products and services that they want that leverage that data. And so that's, things like budgeting apps, things, of that nature, I think are easy use cases. And so ultimately, the assessment of fees is to sort of cover the misstep of some of the largest financial institutions, because they were gathering fee income from other areas such as
Yeah.
overdraft and account transfer payments, things like that really they didn't necessarily build up the right infrastructure, and now they're facing an issue.
Agreed. Agreed. Yeah, I think the lack of pivot has created a priority now, in a panic, if you will, of hey, we have to put a wall around our business that is largely built for the past and not built for the future. And I think they're getting out innovated by the market, right? I mean, I look at my kids. They don't go to the bank. I mean, they have a bank, but they don't ever go to the bank. It's all Cash App and all this other things for them. And so, that's the folks. I mean, I'm the same. I want to share my data and get the most out of that from those apps.
Can we just say though, for the employee or the payroll
Yeah.
practitioner that might be listening, like what we're really talking about in this whole space of rulemaking and fees are B2B fees.
Right
So
now.
right now, and then
Yeah.
of course the suspicion that in some way, shape, or form, when those fees exist between parties, they ultimately get passed on to the employee, the consumer, the average Joe, right? And so I just, I think sometimes we started out in fees, and I'm thinking, who's
Yeah, that's
charging
where
me
the
fees?
JP Morgan. Yeah. Yeah, I'll put the news article in there about what J.P. Morgan did. It's just, I think it's somewhat coincidental, right? Not coincidental, I'm sure purposeful, but not entirely because of the law, right? I mean, I would think that J.P. Morgan was probably thinking through this anyway with the boom and what was going on. Interesting timing, right?
Yeah, and it was quite interesting timing, and from our understanding, it was the work of journalists actually digging in and investigating this
Yeah,
issue that it was the story broke in the first place. And I think it was pretty poor timing as it relates to the rulemaking and things of that nature, because essentially the exact concerns that we had been discussing for many months with the administration were shown in real form when it was reported that JP Morgan Chase was going to assess exorbitant, prohibitive fees to the data aggregation firms. And so I think that was something that was really important and impactful in ensuring that the Bureau was going to move in sort of a reconsideration trend,
yeah.
as opposed to just letting the lawsuit play out between then FTA and BPI.
Well, what does a win-win-win outcome look like here for big banks, consumers, disruptors? I mean, virtual banks, right? I mean, Cross River, right? You have Cross River. I believe they're a virtual bank, if I'm not mistaken. How does everybody
So
win?
they do have a branch, but yeah, they are generally speaking, they operate
Yeah,
as part of the bank fintech partnership model. They've been very successful at
yeah.
doing so, as have a lot of our
But how
banks.
does everybody win here?
That is really a tough question,
Yeah,
because ultimately, and that's why, going to my previous comments, there's a long tail or a potential long tail on this, that could, and a high litigation risk associated with this issue, because ultimately, you know, I think what's most important to keep in mind is, how do the consumers win? And that's the focus that
yeah.
we've been trying to
And stay safe,
work on.
you know?
Yes, absolutely. And stay safe, ensuring that, APIs are very good technology for ensuring that data security and data management is proper, and that the movement of it is safe. But those are costly endeavors to build.
Yeah,
And
yeah,
so it's about ensuring that consumers still have access to their data, that they maintain access. And so however that looks in the future, I think it's principally important to ensure that that data really, is able to be moved based on how the consumers see fit.
Do you find, this is just my perception. I'll be honest, I'm really not super into politics. I don't consider myself on either team. But one of the things I do notice about the new administration, they seem to be much more open-minded and a bit more aggressive about engaging and advancing innovation. Crypto, they do a lot of talking about crypto, lots of different things they've done there. Obviously the open banking thing. Like, how politicized is this? The new administration came in and maybe that changed trajectory for what happened here. But like, do you have positive thoughts? Do you guys have a positive point of view on the current administration that they are trying to balance? Because I think there is that balance of like, we definitely have to protect people. We've got to have laws. And I'm afraid we keep trying to cram, like we always do. We take some new innovation, try to ram it into something from the 50s rather than create proper law for it. But like, do you think this administration is on the right path with the way they're looking at things like stablecoins and crypto and fintech and other technologies?
Yeah, I think this administration has been very open and interested in gathering the necessary information to make sound policy as it relates to financial services. And it's been
Yeah.
focused on, looking at the real innovation that's going on in the market, and then adapting whatever regulations need to be adapted, or changing them, reforming them. And that goes across the board. I think the prudential regulators under, the FDIC under acting chairman Travis Hill, you've got the OCC under comptroller Jonathan Gould, and then the Fed with the new vice chair for supervision, Michelle Bowman. All three of them have a very astute and deep knowledge of financial services and a very positive focus on understanding where innovation can play. And then not only has it been sort of those folks, but also, with the Bureau, you have folks over there that understand the need for ensuring that there's not, significant overreach, that the Bureau has been a very politicized, historically politicized agency. And so there's a need to, kind of depoliticize that a little bit to the extent that you can, but also beyond the administrative state, you're seeing also, particularly like House Financial Services Committee under Chairman Hill, that he has focused on making community banking great again, and part of that focus is really increasing the ability and the access to bank fintech partnerships and the ability to innovate. And so, for those community banks that are engaging, this is, a way to remain viable and to save off mergers and acquisitions and to really, be profitable. And so, kind of juxtaposing that to the previous administration, I wouldn't claim that everybody in the previous administration, were Luddites or, we definitely had some areas where we saw a need for growth within that, within those regulators on their perspective around innovation. But I think it's difficult for regulators and difficult for examiners who are supposed to be, rightly so, quite skeptical of anything that could introduce a new or increased risk into the financial services industry. And then secondarily, there's a comfort to how banking was done, and maybe this is because I'm reading Peter Conti Brown and Sean Vanetta's book on the history of bank supervision, which is a good book and a highly recommended read. But I think back to how we shifted from the conversation around unit banking, having one bank for a local area and only serving that local area, to branch banking. I mean, initially, the American Bankers Association was against branch banking. And so, these things, the longer you study the history of whether it be bank supervision or banking overall, you see similarities throughout that are, how innovation is perceived. I mean, there's been concerns about, the credit card from back in the 50s. And that's, that really stems, similarly with automated teller machines, things like that. There's always that sort of concern. But what we've seen with fintech is that it's been able to really play out in a beneficial way for consumers. It's been able to increase access to credit. It's been able to give them the products and services that they demand. And part of that is obviously the infrastructure conversation around open banking.
Yeah. Interesting. I wonder if it's time that we had maybe like a consumer data protection agency, someone that's just focused on, because I feel like my data gets breached every time I go to the big box store in my town. Pick one. I've got free monitoring from every one of them. Open banking. Right? There's a lot of data. I mean, social media. You could go down a whole lot of paths around data. It's almost like we need an organization just focused on protecting our data. And helping us in that way.
I feel like there's some marketing messaging too, because I don't think your average consumer would just say, or employee, however you're looking at them, would say, I don't want everybody to have my data, right? But if they understood that meant that you might not be able to use cash apps, or you can't, like, what are all the things that you can't do? If you guys can't sort out and come to the right, to the right protections and the right agreements and win-win-win situations,
what do we lose?
like, what do you lose? You lose your PayPals, and you start putting it in terms that our consumers can understand. And they're the things that they want to be able to do and that they want to incorporate it into their own life to facilitate it. And now you have an interested group of people who otherwise would just say, yeah, no, too many people have my data. It shouldn't be that way. Well, you want a lot of conveniences. You want consumerism. You want consumerized experiences. Like, none of that happens if the B2B guys can't figure out how to talk to each other and share information. And I think that's the missing link sometimes with the consumers.
Yeah, absolutely. Yeah, I would just briefly add to that there's always going to be trade-offs to allowing access to your data or to providing that data throughout the system. Ensuring that just as our banking regulatory system has had a long, very interesting tapestry and changes that have come along with it, so too as our data privacy framework. We do not have a comprehensive data privacy framework, and while there has been discussion of how to engage with that, the House Financial Services Committee just asked for comment on that, of which AFC provided some comment on what a comprehensive data privacy framework should look like and how it should operate. And also, recognizing that our system is a bit unique in that we have both the states and the federal government. And each one of those, it's a push and pull as it relates to, is there federal preemption? Is there, what are the states' rights to certain topics and to the ability to promulgate certain laws? And so all of that kind of does create a broader, issue that folks like me, the wonky folks in DC, have to concern ourselves with, and also those that are operating in the state houses as well. But for the consumers, they don't care about all of that. They care about what products and services they can get. So I think going back to really the core principle that we should all be operating from, it's what will ensure that consumers can access their data, can permission their data and move it about the system in a way that they see fit, and ensuring proper optionality, and from the downstream effects of that, proper optionality for financial products and services that fit their needs.
It sounds a lot like GDPR, the portability part of that.
Definitely the portability part. There's other parts that are a little trickier with GDPR, but definitely the portability.
But we don't have a GDPR in America that I know of. I think we have some at the state levels, but I don't believe there's a federal.
There's not. There's not a comprehensive data privacy framework at the federal level. The closest that we have is the California Consumer Privacy Act, and that I think that combined with the General Data Protection Regulation from the EU has actually created sort of a de facto change within the market in some capacity. But there again, the actual limitations of those laws, I think, are important to look at, separating out sort of the extraterritorial jurisdiction issues, but really focusing in on if you're a consumer and what recourse do you have? And so technically under CCPA, if you're not in California, you don't have access to that law.
Right.
So there is definitely a need for some additional legislative work on data privacy. And I think thankfully, under Chairman Hill, the House Financial Services Committee is very well situated to pursue that activity.
Yeah.
I can't help but thinking about the generational side of this. I saw some stats that actually were related to benefits personalization, which has a lot of sensitive information in it as well when you're talking about navigating and connecting experience to your claims, your health situation. And it basically, we basically were seeing signs that younger generations are a lot less worried about Big Brother too. So it's you try to move an elephant right down the hill in the right direction to get a whole lot of stuff done, and yet a third of Gen Z doesn't care if they're tracked by websites or apps because they figure everybody knows everything anyways. And, that's dramatically
Yeah.
different than what we see in the non-Gen Zs or, like half of them, I think 55% I saw don't care about, they're not concerned about identity and credit card theft compared to a much larger number of other generations that
They've
are
probably had their identity stolen a million
and
ways.
I mean, some of it is that, or some of it is maybe it hasn't happened to you yet, so you'll get wiser as you go along. But
Yeah.
generationally, I feel like there's a lot more easiness,
It's true.
and meanwhile, like you're pushing the elephant, like what happens first or how long does it take could really decide a lot about what
Yeah.
form or format anything takes as we get it through.
Yeah, I think there is a different, you're absolutely right. Those lenses have a very different attitude towards their bank. Like my grandmother, for example, she loved her local bank, man. That was the people in that bank, the everything about it, right? That was just her. That was, I think in some ways on Mondays or Tuesdays, my grandmother would always go to the bank and get cash, right? That was part of her week. Do you know what I mean? And but you're right. That's kind of gone, right? The local. I mean, I have a bank. I bank
my
at Navy
God.
Federal. Shout out to Navy Fed. They've been taking care of me since I was a young Marine. But seriously, I rarely go in there, and when I do, it's a great experience. But I don't really need it.
I shouldn't say I
could do
resemble
it
your
all.
grandmother in certain respects, Pete,
You
but
go into the bank. All right. Yeah. Meanwhile, my son has got money and everything on. He's invested in everything on every app. So and I'm like, man, you're just out there. And he shows me things sometimes. I love checking it out. But so look, Ian, I could ask you a million questions, man. But just to kind of round this out, what advice are you giving to your cohort of members right now, as far as this goes, or just any of the kind of rockiness around legislation right now?
Yeah, so I think as it relates to open banking, it's really focusing on sort of how we got here, and recognizing that the U.S. system is still a very markets driven system broadly as it relates to regulation, but specifically within this capacity of open banking. Ultimately, it's important for them to keep the consumer first in their mindset. And thankfully, our members are very focused on that. And so, our recommendation has been to really, gear up and recognize the uncertainty that exists, but pursue the activities that are going to ensure your products and services are able to reach the consumers that need them effectively.
Yeah, agreed. What are some of the other sort of rulings that you're keeping an eye on right now? The things that might be, kind of angst riddled that are on the horizon or boiling right now. Anything else that we ought to?
Hot topic.
Yeah, what is the next newsmaker here for us?
I mean, I don't know if it's a newsmaker so much as it's probably like, inside the beltway, wonky people like me really focus on. So apologies for potentially putting your
Nerding
listeners
out.
to sleep for this next point. But it's around bank supervision and ensuring
Okay.
that examinations actually function as they're supposed to, but that they're not overly burdensome, and that they're really tailored to the way that banking is moving. That bank fintech partnerships are not overly burdened, but that they're able to be engaged with in a safe and sound manner. And education around and informing the frontline examiners who maybe have 30 years of really important and good experience, but through that experience, it's just like a law enforcement officer or an accountant, a forensic accountant. When you see things over and over again that cause concern, you start to really view the world through that lens, and so making sure that those folks understand the exact risk profiles associated with a given innovative financial product or service, how a partnership model functions, and making sure that they have the abilities to engage effectively on those conversations, and that through that you're having a more efficient and effective examination process. So
Yeah.
again, apologies to your listeners for potentially putting them to sleep there, but that's been something that's been keeping us really busy
Yeah.
and engaged. And there's a multitude of other issues, whether it's earned wage access, buy now, pay later, things dealing with payments fraud. I think there's a lot of opportunities within this administration, as well as just moving into the future, around modernizing financial services. And a big part of that is modernizing the regulatory framework in an effective way that ensures that the entirety of the supply chain of banking, as we're seeing it develop, is able to operate in a safe, sound, and responsible manner.
And maybe we can
Yeah,
see some
agreed.
kind of like
Agreed. I love that.
Morningstar rating system or Yelp, Yelp
Yeah.
across the ecosystem of people who are nice or not so nice to each other and work well.
There are certainly standards being developed, within the open banking context. The Financial Data Exchange has been pushing standards, and then also a shout out to the Center for Financial Ecosystem Standards, Seema Gandhi. She's a great person, and she is her and her team are very good at developing standards. They've been working on that for more of the bank fintech partnership space. So there's definitely, I think, opportunities to have sort of that accreditation, that seal of approval, and that too, in turn, will help examiners actually, when done right, it will help examiners understand what they should be looking for, what constitutes sort of a good actor, and how they should be engaging.
That's fantastic. Well, Ian, where can folks get in touch with you, and where can folks get in touch with the American Fintech Council?
So you can always go to fintechcouncil.org. We're always available. There's general inquiry emails and press emails. You can send me an email. I think my email is on there, and also LinkedIn. Always happy to for anybody, and I truly mean this. Anybody who reaches out to me, I do my level best to chat with them, to meet with them, because there's interesting ideas and perspectives all over. And so, I really try to make myself available as part of my job, and as part of my job I enjoy.
Yeah. Well, awesome. Well, thank you so much for coming on. I know this has been really informative. It's filled a lot of blanks for me. Hopefully it's filled in a lot for our audience. And we really appreciate you. And open door, man. Anytime these things change, I'm sure I'll be knocking on your door to come and update us. So
Made us all smarter, Ian. Thank you.
Thank you so much.